Hey everyone, welcome back to the Hampton Roads Real Estate Network. This is Ryan Ponseti with EXP, and today we are going to do something a little bit different than our usual monthly market update. We're going to do it flash style, so we're going to get things rolling here quickly and give you everything that you need to know in just a few minutes. So buckle up, let's get started. All right, so here in Hampton Roads, we have a median sales price of about $345,000. That's been holding pretty steady. It's come down a little bit from the height of the spring and summer market as that rose, which is typical. And we're up just a little bit from this time last month. And we're up about 6% from this time last year. So a pretty decent return if you had bought in previous years. 5 to 6% is about what you can expect from real estate. And that's pretty solid. So right now we are holding pretty steady despite the slowness that we're starting to see in the market. So some of those indicators are settled sales. It's down about 13% from this time last month. So a pretty sharp decrease there. So that is an indicator that we are seeing a cooling off of buyers in the market and maybe a little bit of a thinning out of the buyer pool there. So to support that, we are seeing also an increase in median days on market, pretty significantly, 16% from this time last month. And then last year, pretty significant increase in days on market, over 23%. So at 21, we are starting to get into that normal range of about a month to sell a home, give or take, depending on the specific situation. Okay. And so in agreement with that previous slide, we are seeing some other things that are showing a market slowdown. New listings are down pretty sharply, almost 18% from this time last month. But honestly, from this time last year, it's only down about 2%. So we are also going into the winter months, so we start seeing less new listings naturally. But what is a big difference is that this time last year, we have an increase of 16% of active inventory. So we have more active inventory than we did this time last year, despite it being down a little bit, under 5% from last month. And to support that, we have a increase also in month supply of inventory at 2.3 months. That's an increase of almost 10% from this time last month, and a significant increase of 23% from this time last year. So just more homes in general are available, and there seems to be a cooling off of buyer activity. So maybe a decent time to buy if you are in the market. All right, so what do our rates look like? So despite the very large rate cut from the Fed last month, we have seen a little bit of an increase in most of our loan products out there at about a 0.5% increase. So your 30-year conforming / conventional loan is up around 6.6%. Best products out there, FHA and VA, are around 6%. So these are national averages, guys. So don't, quote me on this or anything. Everything has to do with your personal situation, credit score, finances, et cetera, et cetera. Don't call me about that. If you are interested in buying, you want to speak to a loan officer. But if you want a recommendation for a loan officer or a couple, then I can give you a couple of solid recommendations to kind of get that conversation started. Okay. So what does that mean for you personally if you were going to buy a home around that median sales price here in Hampton Roads? You are going to be looking at around $2,700 a month if you were going to use hypothetically an FHA loan or a VA loan. And for the FHA loan, you'd be putting about 3.5% down. Say if you had about a 6% interest rate, that's about the monthly payment that you can expect. Okay. So what does that look like over the course of 5 years? You can see down at the bottom, year 1, 3, and 5 year investment projection. At the end of the 5 years, you're going to have put about $162,000 into that home that you purchased. And then on the flip side, if you decided that you wanted to rent, you would have a lower monthly payment. If you look at the median rent price for single family or attached homes here in Hampton Road, this is about what you can expect. Of course, your 5 year projection is going to be a little bit better in the sense of numbers. At 5 years, you've spent $126,000, but that comes at a cost to you. Obviously, you don't get anything at the end of renting. You don't need me to tell you that, but so that's the difference there between buying and renting. So everybody's different. You might be in the situation where renting makes sense for you, and that's okay. You just gotta try to keep it as few years as possible and try to get into a position where you are able to buy and invest that money. All right, so this month, the summary is buyer activity is declining, so the market is slowing down. But despite this, home values are holding steady. I would say for now, we'll see what happens in the next coming months as the winter moves on. So stay tuned and see how those numbers move. And also, we're going to keep an eye on the interest rates. I don't expect those to continue to go up. Don't know, but most projections think that they are going to go down in the next few months. There might be another Fed rate cut coming up, and then in the next year, we'll see what happens. So just stay tuned. And of course, I'll always be bringing you the facts every month. If you have any questions about real estate, buying or investing, send me a message. Happy to answer any questions that you have. Until then, see you next month.